Welcome back, everybody, to Dude's Views. I'm Quentin Scott. This is Matt Layton, and we are recording this on Friday. Well, now my phone won't tell me the date.
April
April
4th.
4th, yeah. And so we're going to talk about what everyone's talking about: trade wars, tariffs, economy going down the tank. Everyone's hair's on fire. Everyone's money doesn't mean anything. God, the economy's collapsing. Please save us. Save the red, white, and blue, all kinds of things. Or honestly, is it that really big of a deal?
Stuff all my dollars under the mattress,
Yeah.
right? Bury
Uh,
my pennies in the backyard.
I actually was thinking about that of how many people are going to the bank pulling the money out. And that's when banks default, is when all the money gets drawn out of them. And so it's like panic ensued by media, which we've talked about this a lot in the past. Mass media, they have a story they want to tell, regardless if they're left wing, right wing, or they say they're down the middle. They have a story they need to tell and sell because they need views just like everyone else does. But, me and you were chatting just before
Well,
we
hey,
hit.
just real quick, it's not only, and we'll kind of get back to the point of the day here in a second, but you mentioned it, mass media writing stories getting the eyeballs, but it's not even just the mass media anymore. And again, we're talking specifically about the stock market today. It's all the algorithmic trading that's going on, right? I read
Yeah,
a stat the other day that something like 70+% of all the trading that occurs on the stock exchanges are algorithm driven, right? So it's not even people making these decisions. There's a top and a bottom
yeah.
stop loss or stop gain placed, and then the machines and the computers are just trading based on that, right? And again, we're sitting here on April 4th, a couple of days after April 2nd, which President Trump would call Liberation Day, where he announced really the I think the highest tariff regime ever for the United States.
Yeah.
Um, Shortly on the heels of that, we were all sitting around wondering what China would do. Well, China doubles down on Thursday, April 3rd, I think, or was that last night, the 4th? Anyway,
Yeah.
China comes back with their response, slaps on additional tariffs, and then we saw on the market on Thursday it dropped anywhere from 4 to 6 percentage points. And again, here on Friday, we're sitting here as just about time for the market to close, drops another 4 to 6 percentage points. First drop was based on all of Trump's new tariffs. Second drop was based upon the Chinese response to those tariffs. So
Yeah.
really, we've got mass hysteria in the stock markets, which is really driven by the fact that will all these tariffs and an ensuing tariff war that no one's going to back down, does that hurt or create a recession going forward in the United States?
Yeah, and we're not supporting an administration. Every administration imposes tariffs and removes tariffs. It's just a way in which the global economy works. We put tariffs on Canada, they put them on us, kind of back and forth. Mexico, anyone you trade with, imports, exports, kind of goes back to what your eighth grade civics class, imports, exports. If anyone was paying attention back then, unless you're just trying to get to lunch or gym class. And so, but this is, again, Matt said, the largest America's ever seen and the world's ever seen. And so let's talk a little bit, Matt, about, because you were talking about it a little bit before. Um, and I may actually go a different direction than what you may have been thinking, but like this isn't just the American economy. Tariffs affect the global economy. That's why other countries react. They put a tariff on, we put one down, they put one down. And so for China, Trump enacts a tariff in at midnight their time. So they wake up, they do it midnight our time. So they're not on the phone talking about like, hey, I'll go 20 if you go 25. They're not communicating at all. This is countries, in lack of a better term, this is how we fight now, is through trade and through things like that. So you're gonna talk a little bit about like this is affecting the global economy, hence why the stock market is really seeing a big shift.
Yeah, no, I mean we've fallen probably close to 10% now, which is down in correction territory, kind of that line of what a recession would be. And No, you're spot on. I mean, there's no really end in sight currently unless someone backs down or blinks, and I don't see that happening at least in the short term. Who knows what's going to happen? But kind of to your point on, commenting on policy, I think our main point here and what we want to talk about is not necessarily with the policy is good or bad. Hell, that's relative. It's what each of us can do in light of what's happening, right? I try to I try to take a picture and look at it from the lens of, okay, this happened. What can I do? Right? How do I take advantage of this situation? What can I do today in light of what's happening in the market or in the world or in the economy to better my position or forward my position?
Yeah, because we talked about this when we talked about Doge, is a lot of times when you see the job market surging or you see those numbers, American employment up 2%, it's the federal government creating jobs and putting people to work. I always think of House of Cards, AmWorks, Underwood's bill that he passes through, and he's going to put America back to work. I don't know why I always think of that when the federal government does it.
Hey, you
But
know what's really interesting? Again, all the headlines this morning were about China's response to the tariffs and the market running off another 1,000 points. Jobs report came out this morning.
mhm,
230-ish thousand new jobs were created. That I think the highest analyst consensus number was 200,000. So
yeah,
good news there, kind of in the economy, especially in the light of you mentioned Doge, all the government jobs being cut, but we actually saw that pop in the jobs number, but completely overshadowed by the and again I'm going to call it the hysteria in the market of what could be coming down based on these tariffs and complete sell off of extremely high value companies. And we talked about Warren Buffett probably a couple of weeks ago now. He likes to talk about you should be buying when others are selling and selling when others are buying, right? So I would challenge everyone, and I see the last several days and even the foreseeable future as a extremely important point
yeah,
to push in and buy, right? Because I'll say this, if you've done your research and you've really bought high value, high quality companies, the hysteria in the market is pushing them down 4, 6, 8, 10% of stock price, but no fundamentals, at least currently, no fundamentals have changed in those business, and they're always
right.
going to be around, right? I looked probably a couple hours ago. Apple was nearing its 52-week low. I think no one would say Apple's going anywhere anytime
Right.
soon.
Yeah. I was,
Amazon nearing their 52-week low. Amazon isn't going anywhere, right? So is it not only a good time, is it not one of the best times to push in on some of these high quality, valuable companies just
right.
because, again, the hysteria in the market and all the algorithmic trading has pushed all those prices down. I would argue now's the time to push in on them.
Yeah. And those stocks you're talking about, those are generally called blue chip. They're the ones that no company is recession proof, but some companies are. You'll never hear a company say we can make it through anything, but Disney knows they're going to make it through anything. Amazon, Apple, McDonald's, Coke, they all have this infrastructure and a valuation that it's going to legitimately would have to burn to the ground. The world would for these companies to go out.
Yeah,
So,
absolutely. Hey, you mentioned it, Coke. I think they were down 4% yesterday, and they were down almost 3% today. Right? Got one right here. I'm not
yeah,
drinking any less Coke today, based upon
right.
what the market says.
Yeah, that goes back to our conversation of like buy what you know. This isn't the time, and everyone hears the term recession and they panic. They just sheer panic hits. And one, recession isn't a bad thing. You sometimes need a recession to cool inflation, to bring interest rates down. You got it's kind of a reset. Now, a depression is not what we want. And I think all of us, the majority of us that are in our 30s, we definitely lived through the 2008, 2010 crisis while we were adults. Like I had just become an adult, just got married, housing market tanks. America can never recover. Here we are 17 years later, we're having another one. We do recover. But talking a little bit, Matt, about like you kind of just alluded to it, but these companies, they know their leadership are not panicking in boardrooms because their stocks dropping. Their board members aren't calling, screaming at the CEO. Get that Bob Iger's not getting blown up by Disney board members saying like get the stock up, launch another movie. There's a calmness in leadership in businesses during this time because they expect the market to ebb and flow with administration. So how should we, as just ordinary investors and people, kind of react to some of to your point, you may have some rando on Substack or LinkedIn writing a fear piece that article gets the algorithm going because people are clicking on it and reading it. You may have someone who knows what they're talking about saying, like, just calm down. It'll be over in 30, 60, 90 days.
Hey, but you know
Talk a little bit
what?
about that.
That type of message doesn't get clicks and views and
Right.
eyeballs, does it? But again, hey, it's all about, do you have your, you know, financial house in order, right? Do
Yeah.
you have your shit together at the end of the day? These businesses that we're talking about, absolutely. Sometime down the line, if tariffs go up, my internal costs could go up. Cost to produce or sell goods could go up. But again, these are long-term, high-value companies who've already prepared for all of those contingencies. You know, might they have to raise prices? Maybe. Might there be some short-term pain? Yeah, probably. But again, they're built for the long term. They've already built these contingencies in. Same way with each of us in our daily lives. If you're living down to the last dollar every single week or every single month,
Yeah.
yeah, hey, it's probably going to suck for you. You've not prepared, you don't have your stuff in order, you're not ready to weather any type of recession, let alone begin thinking about how to profit or how to get better for it. So again, it's just all about, you know, do you have your shit in order, and are you ready to move when the situation dictates, right? So I'll be honest, you know, I bought stocks yesterday, I bought some more today. I called the bank, I negotiated a lower interest rate on a loan that was tied to the 10-year treasury that's, you know, has been going down and took another big dump yesterday.
Yeah.
I was prepared, right? I was waiting for an instance. External actions come at me.
Right.
I look, analyze, decide, and act.
Yeah. And, Ash and I just refinanced our house, went from a 2.3% interest rate up to 6.7. So I'm watching the rates, wondering, that's going to creep below five, back into the fives. The moment it does, I'm calling my banker and saying, like, hey, want to refinance for what's on the books? Let's get it down a full point. And so where there can be panic, there's also time to take a breath. Don't stop putting into your 401k because guess what? They're buying when you should be buying. Your 401k, it may be going down, but they're buying stocks at lower prices for when it rebounds. You're going to see that number go back up.
Yeah, again, you've got to be prepared enough and confident enough in yourself, like on a day to day, to say to yourself, stocks are on sale, right? There's a 2-for-1 sale today.
Yeah,
How many and how much can I buy, right? And that's that's hard, right? Again, especially when all the hysteria out there is screaming, you know, oh, worst, the stock market's down the most since COVID, right? The highest tariffs in ever, all these doom and glooms. We're going to start a recession. You've got to understand that, yeah, that's a possibility.
right.
But, you know, I've prepared my own house to the point to where I see positives here if I take action as opposed to sitting back, being afraid, and start pulling my money out. It's You've got to be prepared to push some in.
Yeah. So we both are dads, we have kids, we have families. So let's talk little bit about what is the average Joe Blow that's just sitting working a job, doesn't have 10, 15 grand to put in the stock market. Who should he and or she, we'll say Jane, I'm not going to say that last name because we may get canceled. So we say Jane and John, they're both sitting there, they're looking, they don't know who listened to. Who would you say are the three or four people they should be listening to, plugging into? That's just like the Fed, Treasury Department, like actual sources of truth and not mass hysteria, bloggers sitting in basements eating
Hmm.
Cheetos, just substacking it up and like the end of the world's coming.
Oh goodness, that's a tough one. You may have to go first. Go first there. So I will kind of talk about my theory and how I go about it, which may be different from you, and it's certainly probably different from someone starting out that and or is new to this, right? So I probably consume much more information than I should, but I try to go a variety. I'm not out looking for someone that I already agree with and I know they're going to just say the things that I like to hear and already believe. I try to like consume from the spectrum because in my mind, you've got people on both ends. I'm going to say right or left, but I'm not necessarily talking about the political spectrum, but to the extremes on all sides. And if I get a good cross section across that spectrum, I fully believe the answer or the truth is somewhere in the middle, right? So again, in
Yeah.
my brain, I'm I'm consuming as wide a spectrum of information as I can, and then I'm condensing that down on my own based upon what I already know and the kind of my own knowledge base over the years. And then I'm arriving at, what I consider my truth, right? My
Yeah.
truth probably different than Quentin's truth, but neither of them are any less right or wrong. But again, but I don't know who I would send someone out to. If it's like if there's one or two people you should listen to and get your information and follow their advice, I that's dangerous as far as I'm concerned. But I'd certainly like
No,
to hear what you think about it.
I completely agree with your answer because I'm in the same boat. Like one, I don't panic. I trust my gut. I've gotten here by doing a cross section of listening to watching CNN, watching MSNBC, watching the news, taking it in and saying, like, okay, what is my gut? What is my history? What is my success rate and failure rate? What is it telling me what they're saying? I need to discern and analyze this information for myself. Being a free thinker and a critical thinker is being lost in America today.
Mm,
I worked at an organization where they were legitimately trying to figure out how to train critical thinking. And in a meeting, a guy was like, you can't. Either you do it or you don't. And you got to be put in situations. You got to be a critical thinker. I think the dangerous part is when you do try to find an expert or a guru, like even if someone is like, I'm only going to listen to Warren Buffett, he's got 100 million times more dollars than you do. So he can make a mistake right now and he's not going homeless. You can't make that mistake with your last $1,000 and be good. And so,
mm.
yeah, I absolutely agree. A cross section of voices, of articles, and I think it goes back to what we talked about a lot about with local politics, like especially with finances, anything that is about a recession. Research and educate yourself. Know where you feel comfortable, know where you want to invest. Know if you're in a place where you're like, I feel like maybe we should have some cash on hand. Then work a plan to have $1,000, $2,000 of cash in your house with you. Like that's not a bad thing to do. Have a plan of putting some more in savings if you don't want the stock market and your interest rate in your savings account as of right now isn't tanking, but if it's higher, put some in there and get some compound interest. Like know where you're safe, listen to a cross section of experts, and then don't panic. I think panic is what causes most people to cash out right now. And
Well, and
then
I think
go ahead.
I think majority of panic comes from people that aren't prepared, right? And a lot of what we're talking about at the lowest base level is everyone's heard it. This is the blocking and tackling of personal finance. There's nothing sexy about it, but if you don't have these things in place, you can't get to and do the things that are really going to begin making money for yourself, right? So you've got to go here to get there, right? You've got to do these again, blocking and tackling of, finance in order to have an extra $1,000 a month to put in on the stock market or You're going to have to do all these things that, okay, maybe I've got 5,000 sitting over here on the edge that I'm not doing anything with. The market's down 10% in the last couple of days. Everyone else is terrified and pulling out, but I'm pushing all in, right? Because I'm
Yeah.
buying on sale today.
Hey, and talk a little bit about, say I'm doing that. I'm taking my 5 grand, I'm going in right now, but don't try to time the market. Go in knowing it may go down another 5 or 10%. You got in and it went down, but don't try to time that bounce because one, you'll either miss it or two, you'll have analysis paralysis because you're not an expert in it. Not you in general, but the average American can never predict the market. That's why people fail at it so much. Talk a little bit about even if you get in, stick with it. Don't panic if it goes down another 5 or 10%.
Right. And it's, so we're talking about timing the market and going in, and Quentin saying you shouldn't time the market, but it absolutely 100% correct. And again, if you've got all your stuff in order and you're investing regularly, this would just be continuation of that regular investment, right? Maybe things are down so much. I know I've done all of my research. I've got quality companies that I believe in. I don't believe that there's any reason their intrinsic value has went down, so their stock price shouldn't be down 6%. So maybe I push a little bit more in today because it went down. But kind of the trouble you get into is like, it might go down again tomorrow. I'm going to wait, right? Or even the opposite. You get up to the top and start thinking about selling. Oh, I'm going to wait another day. Earnings are coming out. Yada da da da. Just make a plan. Be disciplined. Follow the plan, and I mean you can't really lose.
Yeah, we talked about it a few weeks ago when we talked about
But I mean,
Buffett saw that.
I would say there, yes, you can do more or less at times depending on the market, but don't completely change, processes and strategies based upon in a one-time event that we saw over the last couple of days. Now's not the time to try something completely and crazy and new, right?
Yeah.
It's might be time to step on the gas a little bit, or there might be times to step on the brake a little bit. But a big event out in the economy isn't the time to make a full sale change on what your strategy already is.
Right. And I'm going to make a plug now. Now's not the time to go buy someone's online course for $199 on how to time and get rich in the market. Um, one, I don't believe in those things anyways. I believe in good research and a good, solid investment strategy. But going back to what we talked about what Buffett said a few weeks ago, it's like get in for the long haul. Don't buy stuff that you plan on trading. You wouldn't buy a G-Wagon expecting to get rid of it in 3 months. So don't go buy blue chip stock waiting for the first uptick. Like if you're gonna buy it, stick with it and stay with it. And so we talked about, I don't know if there's anything else you want to add, but we've talked about kind of a gambit of things, but I think the whole sum of the conversation is just don't let the news panic you. Be conscious about your decisions and have a strategy. You should have had a plan before it happened, but if you didn't, make a plan now.
Yeah, hey, don't panic on extreme market movements, and two, make a plan so that you could take advantage of the next one. If you're not able to push in now and buy some stocks, be ready for the next time this happens, because trust us, it will happen again.
Yep. Anything else you want to add, Matt?
Nope, that's it.
All right, y'all take it easy.